Marginal tax brackets, again, this might be something you're familiar with just from school, just understanding how the tax system works. However, if you're not, we're going to dive through it, make sure you understand. So you might think, and these tax brackets change year to year, not day to day. I mean, they change. It'd be nice if they stayed the same, but inflation happens and things change all the time. Now, the marginal tax brackets do, like I said, they do change. I would be familiar with them. We'll include them in our resources as they do change year to year. So make sure you're looking in the resources and memorizing the current tax brackets. Now, I say memorize. There's a lot to memorize within that, and you likely won't really need to know the exact numbers for tax purposes. Unless you memorize every other threshold, every other number you need to memorize, phase out, everything like that, I wouldn't worry about specifically and perfectly memorizing these. However, I would get a general idea of knowing that, okay, the first $0 to $10,000 of income is taxed at 10%, right? Or the next $10,000 to $20,000 is taxed at 5%, whatever it is. I would get a general idea for how that all works. And on a question on the exam, you're likely to get a made-up one like we have here. This is a simplified tax bracket, 3 brackets. With our real system, there's a lot more brackets and a lot more nuance. Now, you might think, and this was what I thought when I started taking accounting courses all the way back in college, is, oh, I have income over $20,000. As such, all of that income is taxed at 30%. That's not how this works at all. What happens is, let's say I make $25,000 in income. The first $10,000 I make is taxed at 10%. The next $10,000, so $10,001, because the IRS doesn't want us to have to worry about rounding or anything, $10,000 to $20,000, that next $10,000 is taxed at 20%. The next, and anything over $20,000 is taxed at 30%. And we do have, like I said, we have more tiers in our actual marginal tax system, but we're using a simplified one here. That's how it works. So you'd say the first $10,000 of income is taxed that. And you can simplify it, and it's a lot easier. Let's say you're doing this for a bunch of different income amounts. You know that the maximum amount you're going to be paying is $1,000 for the first bracket, because that's just the max. $10,000, first 10% on the first $10,000, that would be $1,000. So that's always going to be the same. Same with the next bracket, $2,000. It's 20% on the next $10,000. So you kind of get the idea. These marginal tax rates, this is the tax rate applied to the additional income a person owns. So this would be important to know. Even though we say 10% then, 20% then, 30%, if a question asks what is the person's marginal tax rate, it would be the highest that they use. So again, let's say we have $25,000 of income right here. We see it. Even though we do 10%, then 20, then 30, if the question said what is their marginal tax rate, it would be 30%, because that's the highest. Just making a note there, that could be a multiple choice question. Now, the effective tax rate, if you're familiar with a lot of different formulas, what's your effective interest rate, effective this, effective that? Well, effective means actual. What is your actual tax rate? Well, that means how much tax did you pay per income did you earn? And that's going to be different. It's probably going to be lower here because you paid a total of $4,500 in taxes, we see, because it's 1,000 plus 2,000 is 3,000 plus 1,500, that's 4,500. 4,500 divided by 25,000, that is going to give you an effective tax rate of only 18%. So differences there. Important, the question could ask, what's the effective tax rate? What's the marginal tax rate? That would be an important point to distinguish between. I know I'm jumping around a little bit. Hey, that's just me for you. Now, in such systems, income's divided into tax brackets with different tax rates applied to each bracket. Think of them like buckets. We're filling up the first bucket, the $10,000, the second bucket for another $10,000, and then this third bucket is an endless bucket. So if you make $1 million, everything after that's at 30%. Yeah, brackets, buckets, whatever you want to think of them as, think of them such as that. This is a good example if you are not familiar with how this works. You know, generally, would you see a question straight up asking you to do this? Probably not, but this will significantly influence lots of other sims, multiple choice questions. So this is for sure, you need to know this as a foundational concept. All right, what's the difference between tax avoidance versus tax evasion? Well, they both save you money, but there's a big difference. Tax avoidance is going to be the legal use of tax laws, deductions, credits, planning strategies, everything else to minimize your tax burden. Tax evasion is the illegal practice of just not paying taxes by deliberately underreporting income, inflating deductions, using basically all this stuff, but illegally, hiding money or assets, not actually filing your tax return. So tax avoidance is legitimate, and you got to make sure you're following the rules, but as long as you're following the rules, these are going to be claiming eligible deductions, contributing to tax advantage retirement accounts, timing your income or expenses to reduce taxes within the boundaries of the law. This is allowed and encouraged. Yeah, use the tax law to your advantage. However, tax evasion, this is going to undermine the fairness and integrity of the tax system. Hey, you might think the tax system is not fair, just as is, but we're not here to debate that. Tax evasion is a criminal act, so gotta watch out for that. Make sure you understand the difference between avoidance and evasion. What is our deadline for filing an individual tax return? You're going to see this likely pop up in other reports throughout the course, and that's fine. I want to make sure you get this down. It is April 15th. I mean, you probably knew that. Just what's tax day? It's April 15th. However, if April 15th does fall on a weekend or a holiday, you are going to have, it could be April 16th, 17th, 18th. Probably wouldn't go any further than that. And then obviously, if there's anything serious going on in the world, maybe the IRS will extend it further. Crazy things have happened in this world. Now, you do need to file a return if you meet a certain income threshold. For example, if you only make $1,000 for the year, you're not going to have to file that tax return. The amount does change year to year, the amount that you have to make over in order to file a return, and that is an ever-changing amount, so we will include it in our resources for you to memorize. However, generally speaking, I think it's safe to say if you make $500 in the year, you don't have to file a return. And let's think about that. Why is that the case? Well, exceeding the standard deduction. The standard deduction is, let's just say it's $15,000 this year for a single person. Well, if you filed a return and you only made $15,000, $15,000 minus the standard deduction of $15,000 is going to give you a $0 taxable income. As such, you don't owe any taxes. So it kind of makes sense why it's got to exceed the standard deduction as well. Now, if a taxpayer is unable to file by the deadline, you can request an extension. You don't need to know the form. It's just there for FYI purposes. This is going to give you an additional 6 months to file the return. However, you do still owe that money on April 15th, so you got to make sure you do your tax prep calculations and all of that, estimate how much you owe. Maybe you just overpay and you just don't have all your tax forms. That's fine. Overpay it on April 15th and just get your forms together and do it a month later, or at least by October 15th.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.